Hello, everybody, and welcome back to the channel. My name is Max. This is my favorite show that I like to do every evening called The Daily Factor. Hey, what's up, Jackson? Do you want a treat? I think Jackson wants a treat. Do you want this? Is this what you want? You're going to have to come up here and get it, Jackson. You're going to have to come up here and get it from me. Okay, come on. What a good dog. What a good dog, Jackson. All right. Saturday night football's on. We'll try to make this a fast one. I'm watching the Alabama-Auburn game. I just watched my Sooners beat LSU just barely, but we'll take it. Been a great day for football. Tomorrow we have some pro football on. But, yeah, I tried to time this so it'll come on in the last part of the second half and on at halftime. But I want to be back to watch the third and fourth quarters for sure. Hey, what's up, Bikerman? Thank you for being here, bud. Chad's here from the great state of Texas, putting up some Christmas lights. When Jackson and I went jogging today, that's what everyone was doing. I saw several crews putting up lights, and then I saw, some homeowners out there putting up lights. Jax, what are you doing? I think he wants to eat. Let me get him his food. I should have fed him before the show started. All right, I should have fed him before the show started. All right, guys, the Daily Factor. Well, first of all, remember, nothing you hear here, see here, whatever is financial advice. Consult the licensed financial planner. This is for fun and entertainment only. And also, don't forget, you can always donate to the station at that address right there. But anyway, let's get this show on the road. Let's get this show on the road. Now, just for there may be a few new ones, probably not. The Max Factor is my own proprietary metric. I don't think total return tells the entire story with these high yield ETFs. Really, these ETFs they pay too much money out. It's ridiculous. Nothing should yield 50%. It's not possible. But it broke the matrix when they came out with these high yield ETFs. So I had to come up with a better way to measure these, and that's what the Max Factor is. Nonetheless, the Max Factor is looking, I do think it's a good way to measure these. It's only looking at the past 90 days. So it shows you which funds have been the best mix of risk-adjusted reward, considering the high dividend and considering the inevitable NAV depletion that comes along with a high dividend. It shows you the funds that have been the best for the past 90 days. Doesn't mean they'll be the best in the next 90 days. Of course, no metric can tell the future. This is backwards looking, but I still think it's interesting to study the relationship between the distribution and the. I think it's interesting to study the relationship between the distribution and the actual NAV retention. How much NAV they're able to get, because like I always remind folks, high yield's great. Everyone wants a high yield. Pay me 100%. Okay, that's great. I'll take that. But what cost does that 100% come at? And the Max Factor tries to identify yields high yields that don't come at too high of a cost to NAV growth. So let's get this thing going. All right, there we have it. Let's meet our contestants. Let's see. I need to get this set up a little better here so I can get. All right, let's see. All right, let's meet our contestants. Our first contestant is Gold Y, and this is from our friends over at Defiance. Now, Defiance is known for paying high yields. Their products are known for the high yields, and true to form, this one also has a high yield. In fact, it has the highest yield of any of the other ones we're going to be looking at tonight. So Gold I guess we could let's look at it here. Let's examine it here and see. This is Gold Y. I'm sorry, I said Gold I. I meant Gold Y. All right, down and to the right, that's kind of a familiar pattern. Anything that pays 50% or more is going to look like that. I mean, it just, unless the underlying asset's really hot. And I mean, gold is really hot, but it's not hot enough to offset this depletion, is it? Now, it doesn't mean these can't be good investments, but I mean, be cautious. 32 million under management. This is saying a 32% yield, but it hasn't even been a full year. The max factor figures out what it'd be for a full year. Jackson, what's going on, bud? Tell me your joke, Jackson. Jackson, tell me you're joking. He's already slammed his food. I try not to give him a really big bowl because he'll eat even if he's not hungry. So I just try to feed him on an as-needed basis to help him out. But I think he wants more. But anyway, okay, Jackson, just lay down and be a good dog. But in any event, it's actually paying around 50%. So some money's come flowing into this lately. Look at this. September 15th, a lot of money came into this thing. $11 million one day, $14 million. They haven't had any money flow out of it, any net money flow out of it. Anyway, all right. So that is Defiance. Gold Y. Our second contestant is, speaking of high yields, this is from YieldMax. That's also their brand. Similar to Defiance, it's the option trading is done by the same people. On GDXY. Now, this one's based on GDX, which isn't really gold, but it's gold miner, so it's close enough. I don't believe SLJI is old enough to be on here, but I meant to check while I was doing this. If it is old enough to be on here, I apologize. I'll put it on next week. I just got distracted because I worked at gold miners, so then it made me think about silver miners naturally, right? And actually, this one has been out long enough to be on here. I'm sorry. It'll be on next week, or it'll be on an honorary basis this week. We'll compare it. Anyway, but back to GDXY. We'll look at it. We'll look and see how that one compares also. It just won't be part of the graphic. Okay, so this one, pays a high yield, about 50%, and has sideways movement. That's actually not bad for the yield it pays, but gold has been in a huge or not even gold, GDX, which is gold miners, has been in a huge face-ripping rally. To get sideways action on GDXY, you need this out of the underlined. That's why I always say don't worry about what kind of strategies they do. That matters the last 10% or something. But all you have to know is what's the underlying and how much yield did they pay, and that'll tell you about 90% of what you need to know about any fund. But in any event, all right. So that's the underlying for GDX. Now GDXY, like I say, NAV's gone straight sideways for a year. That's pretty impressive, but especially considering it's paying a 47% yield. Let's see the assets. This has about 200 million under management. I had this and I sold it right. What day is that? Somewhere in here. I sold it too low. It bounced up after I sold it one of these days in here. And then it bounced up a little bit, but then eventually it came back down. I think I did all right selling it, getting out of it when I did. But in any event, all right. I made a nice little profit on that one. So let's check our next contestant on the Price is Right on the daily factor. SLVO. Speaking of silver, now this one pays 17.9%. So this one could probably have some up and to the right price action, depending on what the asset does. But it doesn't have that much of a tax on its NAV. So the NAV, can go up and to the right. That's the thing. Just other things being equal, just always take the one with the lower paying yield. And you'll if you're concerned about NAV. Depletion, decay, erosion, whatever you want to call it. Well, anyway, let's see how much this thing pays. There's 244 million under management. All right, so let's check out its underlying though. Let's see how much upside we've given up. So this thing's up from 70 to 100. That's 30 points on 70. That's like 40%. Just eyeballing the chart, and that's just NAV only. This chart doesn't include the dividends. It shows the dividends down here, but it doesn't put them into the price. So let's look. Let's see what that took. Let's see what you gave up. I bet it's a heck of a lot. In fact, I know it is. I know it is. Yeah. So, but you could have had 20, 30 to 50, which is 20 on 30. So that's a 66% increase in NAV. So anyway, but the difference is about 17%. And the difference is the dividend that SLJ or SLVO pays. That's the difference. Other than that, you'd just be better off getting SLV. But all right. iGold. All right. iGold only pays a 15% yield. So I bet you it has some up and to the right action. But let's see how much they've traded. Up and to the right action. I'll put the comments back on so I can see them. Hey, Greg. Hey, Richard. How you guys doing? All right. So sure enough, iGold does have some up and to the right action, but it only pays 15%. So it's not too high of a tax on the upside, right? But let's see what you're actually giving up. So what did iGold do? It went from 20 to 25. I'm going to call that, that's 25%, right? 5 on 20. Yeah. Okay. So it went up 25%, but of course the underlying probably up. Well, we can figure it out. It's up that much plus the dividend. So probably up about 45%. It's not magic. There's no free money. They're just giving you back some of your upside in the form of dividend. I bet this is up, maybe 50%, something like that. So let's see. What did we do? We went from 250 to 400. That's 150 on 250. I mean, yeah, you made this would have been up like 60%. So if you need it, always better just to buy the underlying if you're concerned about the NAV, or if you have to have some income, choose the ones that pay less because it's less of a tax. Now let's look at Goldeye. Now Goldeye pays 14%. It's going to be the same thing, I bet. One thing we didn't look. It's no big deal. Let's look at Goldeye. I didn't get the AUM on the last one, but let's look at the AUM on Goldeye. This is from UBS. This one's been around for a while. This one came out in 2013. So it has a heck of a track history. So there you have it. Pretty typical of any type of income fund over a long enough period of time. Two things hit this. For one thing, gold got crushed. Gold was crushed from, gold was not doing well from 2013 to just recently, but and it has turned around just recently. But the other thing is that the yield crushes this also, because they pay you the yield whether or not the asset goes up. So, in one of these yield funds, if the underlying asset goes down, you're suffering that, and then you're getting a yield in addition to that that's also coming out of the price. So these are definitely bull market investments. Let's look at this on a 3-year basis. It's up 18%. That's not that good. Okay. So look at this. This is a handy tip on, you can look at the 1 year, see where it says performance year. That means NAV performance. NAV's up 13.3%. Okay. But the 1 year return, this is how much your account is up, because those dividends just don't disappear. They go into your bank account, or they go to pay bills, or they go to do whatever you guys do with them. So actually, NAV's up, NAV alone's up 13%. This is up 30%. Well, what's the difference? The difference is the dividend. I mean, that's why the NAV's down. That's why the NAV's lagging. It's just the dividend. All right. So let's go to the next one. Now, how many assets? This had 137 million under management. And it's been around for, forever. Let's get a little weekly look at it and see if the weekly looks as bad. Or actually, well, when the weekly comes up, I want to try something. Okay, so on a weekly basis, this goes back to, it's sideways on a long enough basis. This goes back to 2022, But on a really long basis, let's go back to this monthly chart. And then I want to overlay a chart of gold, which is the underline for this, and see if it was really getting crushed in the mid. Yeah. Okay. So this one was from 2013 is when this thing came public. So gold dropped from 491 to a low of 103. Oh my gosh. Now I read that wrong. It dropped from 180 to 100. So it dropped 8, but that's a lot, 40%. So, if you invested in this fund back then, it's not the fund's fault. It's giving you your yield generated by the options, but the assets are going down at the same time. You can see that chart looked terrible. That chart looked terrible. But the opposite can happen too. If you can get in a rally, then you can have your cake and eat it too. You get some yield and you get some NAV upside, just not a whole lot of it. All right, and then Y Gold's the last one. I think this one's badass. And I may have missed one. I'm watching football games, and there seems like there may be more on there, but if I missed one, I'm sorry. We'll put SLJY on there next week, and we'll look at SLJY and see how it, and make sure that it wouldn't have won. We'll eyeball it. We'll eyeball it into the graphic. Okay, so Y Gold. So this thing only pays 8%. It pays the lowest yield, but it has the best NAV because of math, because of course it does. This thing went from 25 to 43. So what is that, like 18 points on 25? I mean, it's pretty good at 72%. So, but we could look at GLD over the same time, and it's probably up 72% plus whatever the dividend was, which was 8, and then plus a little bit because these strategies aren't totally efficient. But I bet gold over the same time was up about 80%. I guess we could just look right here at the 1 year. So it's 60% is what it's saying on here. Performance for the year, 60%. Yeah. Anyway, well, Y Gold looks pretty good. I mean, it got almost all the upside of the underlying. I still have to do the math myself. I don't believe it went from 260 to 400. I guess that's right. All right. So anyway, those are our contestants. So let's look here. Let's just look by, we've already kind of looked at this, but let's look at the quarterly NAV return. The best one is Y Gold that pays the lowest yield. The second best one is I Gold that pays the second to lowest yield. The only thing that looks out of place is Gold I, where it pays a little bit lower yield and has way worse NAV. Gold I is looking like not nearly as good of an investment just compared to I Gold, because, well, actually one's 14, one's 15, but the yield's the same. That's only a quarter point apart. So call the yield the same. I Gold got 3 times the NAV return. Not quite 3 times, actually, but close. Something, Anyway, but like I say, you can either have a high dividend, get one of these down here and have less NAV return, or vice versa, or somewhere in between. All right, so now let's look at the stable DEX. The stable DEX just measures the relative stability relative to the SPY. So the most stable out of all of these is Gold I, and it pays a 14% yield. Now it didn't look as good as I Gold as far as the NAV it caught, but it is definitely objectively more stable. And I bet it has to do with probably the distance out of the money that they sell the options, or the strategy differences. I Gold is more aggressive at catching upside, and you can see they caught almost 3 times the upside, but they're also taking more risk. Maybe they're using weekly options, and Gold I is using monthly options. But anyway, Gold I is the steadiness winner. Gold Y actually is somewhat steady too, believe it or not. Sometimes the ones that pay an ultra high dividend, you would think would be opposite. Sometimes the high yielding ones, like a Yield Max or whatever, can exhibit more steadiness. I guess that makes sense because the dividend, because they get less upside, so they're more steady. They're steady in the wrong direction. You don't want to be steady on the upside, right? So but also the ones that pay the giant dividend also don't go, they have a bigger buffer on the downside. So that kind of explains the steadiness. Steadiness is just one of many factors. Like I always say, a fund can be too steady. Anyway, then we have iGold. It's 65, so 65% as stable as the SPY. SLVO is about half as stable as the SPY. It's based on silver. Silver is more volatile than gold. And then we have WYGold. And this one only pays 8%, so it doesn't have much of a buffer, but it does really well on upside though. But still, it's not that stable if you care about stability. And then the least stable one is GDXY. Of course, that's gold miners, and it pays the highest yield. Well, it pays it's tied for the highest yield. Gold Y pays a high yield also. So, and Gold Y, trying to think. Really, Gold Y and GDXY are about the same yields. I mean, one's down 3, one's up 1. I mean, that's not a huge difference, in NAV. One pays 48, one pays 46. Those are very similar type investments, and go figure they're from YieldMax and Defiance, and that's what those guys do. They maximize the dividend regardless of what else is going on. And not on their target funds, but on their old school funds. What's going on here? 17-3, Bama, Alabama spanking Auburn. All right. Anyway, iGold won. I mean, and look at this. I mean, you get a 15% yield. You have the second best NAV, but to get a little bit better NAV down here with WYGold, you got like half a point better NAV. So not even half a point better NAV, but you left a bunch of yield on the table. So I definitely think iGold is a good looking ETF just on the metrics and and based on the past quarter. I mean, because you have yield, you have NAV, and you don't have that much stability, but the stability factors in, but you have enough stability. You have stability in the right place. Anyway, second place, Silvo, Gold I, WYGold, GDXY, and Gold I. Now let's look at SLJY, and we're going to kind of eyeball it and see if they would have won. So to have won, they would have had to do a combination of better than 15% yield. We won't figure the stable decks for these guys, but SLJY definitely has better than a 15% yield, I think. But then let's look at the NAV return. But like if it has a 20% yield and a 20% NAV return, yeah, it's the winner. It just didn't get in here. But I'm not saying it will, but let's go look at it if you could. All right, so here's the NAV return for the quarter. It's 13%. I don't even have to eyeball it. That's NAV only. So the NAV return, so it's 17 on one and 13 on this one. So it'd been behind there, but the yield that's about 5% in about a quarter. So if it pays about 20%, it'd be close. It's going to be close because it has, it'd be close, but I think it would probably be second if we had run it. I think it would go iGold, SLJY, SLVO. Yeah, because SLJY had a little bit better NAV return. It was 13 something, and I had a little bit, and it's yielding about 20. Yeah, it definitely would have been number 2. I don't think it would have unseated iGold. All right, guys. Well, hopefully your favorite one won. Hopefully your favorite team wins today. Yes, I do know it's Saturday evening. Why did I have something? I said Saturday show. Did I say something wrong? Anyway, I am watching football. I mean, but yes, I do know it's Saturday evening. All right. So, what do you guys want to talk about anything? We can darn sure talk about something. Let's look at let's get old dividend channel up. Let's check out SLJY against SLVO since inception. One's miners and one's silver, but we're just going to go with it. SLJY. All right. Well, that's a good look for SLJY. They got way ahead. Now they lost more, but they were so far ahead. They look like blocks. Blocks just get so far ahead of the crowd, even though it loses like crazy. At least, in shallow pullbacks, it still stays ahead. It just gets out to a fast start. Anyway, that's a good look for SLJY. I guess let's run SLJY against iGold, the winner, and line them up next to each other. One's silver, one's gold. So it's not a totally fair comparison. But yeah, SLJY, just because the underlying, I'll show you why it's not a fair comparison. We'll look at silver versus gold next. But in any event, yeah, this is a good looking, SLJY is a good looking fund. But let's do this though. Let's look at, what was that? That goes back to September. I guess that one came out September 19th, October, November, December. Wait, is that right? Oh no, August 19th. That's right. So it just, okay. See, it just got old enough to be on the list. I'm sorry I missed putting it on the list. But let's look at the same time frame. And let's just look at silver versus gold, and I think that'll explain why SLJY is ahead of SLV. Maybe, I don't know. I haven't checked this chart out, but I'm guessing silver. Yeah. So that's what I'm saying. If you don't know anything else, just look at the yield. If you don't like erosion, depletion, whatever, take a lower yield, and then just choose your asset. Choose the underlying carefully. It's not like there's nothing wrong with iGold, but if you would have been thinking about iGold and SLJY, you made a bad decision getting iGold between the two, just because silver's up more. Jackson, what's going on, bud? Oh, he's trying to eat a fly. There's a fly. I saw him jump at something. I was wondering what it was. Anyway, hey, Ethan, SLJY versus K-Silv. Okay. Yes, sir. We can do that one. Also not a fair comparison because I bet silver miners are ahead of silver, but it's as good of a comparison as we can get. And you can't make everything fair, right? Is that, golly, I need to get new glasses. My brother-in-law's the guy that I manage the model portfolio for is an eye doctor, or he's an optometrist, and I mean I'm going to go home in a month, and I need to have him look at my prescription. All right, well, yeah, look at SLJY. I mean, it's only, it's like 1/6, 1/7 of a year or something, but I mean, heck yeah. It's a good look. SLJY looks, or K-Silv looks good. SLJY doesn't look bad. I mean, but yeah, K-Silv's a monster. K-Silv is a monster. Oh, and also this one goes against my rule, because if we put silver against silver miners over the same time frame, this one is going against the rule, because I bet you silver miners, I guarantee you silver miners are ahead. What's the silver miner index? SLJ I would think it would be SLJ but it isn't. It's something else. Silver miners are silver miners are SILJ. Oh, yeah, and SLJY. Okay, yeah, I get it now. Anyway, yeah, this one breaks the rule because silver miners are actually doing better than silver, but Howard's saying, hold my beer. I'll take my silver ETF and I'll beat your silver miner ETF. That's really good. Yeah, it's a good one. It is a good one for sure. Okay, Greg, what's going on? Do I know of any other ETFs selling put spreads, lightning spreads? I want a complete list. Yeah, it's QLDY and Blocks. Blocks doesn't even do it on the whole portfolio, but they do it on the stock positions. On the ETF positions, they're running the yield max strategy, the synthetic covered call spreads. And they aren't synthetics. They're just covered call spreads. But they're running the yield max strategy on ETHA and HODL. On FBTC, they're just straight long. They just own it and don't sell any options. But on everything else, it's lightning spreads. So part of the reason they do well is because they're straight long, and when Bitcoin goes up, they're straight long. On I forget which one it is. Is it HODL or FBTC? One of them they're just straight long on. So but not to mention on all those stocks they do lightning spreads. So you have that one, and you have QLDY. That's the only ones I know of. But there's good news coming. YieldMax is coming out with a whole suite of lightning spreads. And of course, people won't buy it because they hate YieldMax, but anyway, that's fine, whatever. But they're coming out with a lightning spread for Apple. They're coming out with the lightning spread. So single stock lightning spread funds. So get this. And we can I'm thinking about doing some content on this. We can kind of know how they might do. And the way we could kind of know that is we could look at Income Shares, which is Canadian and I think European, changed their strategy August 4th. And lo and behold, what did they change to? They changed to the best strategy there is. They changed to lightning spreads. That's what I'm saying. If I was president, I wouldn't make the covered call illegal. So anyway, but they switched to this. They switched to lightning spreads, and this is all of theirs. So they have Tesla, Nvidia, Amazon, Apple. Anyway, YieldMax is doing the same thing. All the same underlines, or the same type of underlines. Cash secured put plus stock, the lightning strategy. So what I might do to generate some content is look at how these funds did prior to the lightning spread and how they're doing now. And they're doing killer. They're probably catching more upside where there's upside to catch. But they're, it's more efficient at catching upside. So these guys at Income Shares, they used to have like a triple QY plan, just selling a cash secured put, probably in the money, but they switched to the cash secured put plus equity. Here's the deal. These guys have balls too, these damn Europeans, because they aren't doing put spreads. They own equity and they just sell a put. So really it's like cheating. You're really double long. You know how we say the lightning spread's double long between the two strikes? Well, they're double long from wherever the put strike is down to zero. So but then of course they aren't double long above the put strike. They're still long through the stock. So it's kind of like a variable tactical, what's it called? Tactical leverage strategy. But so but the YieldMax ones are in there saying they're going to sell cash secured put spreads, or you don't have to have cash secured. The put spread is secured by the spread. I guess it's cash secured because you have to keep the amount that you could lose, the distance between the strikes, less the amount of the income generated in the account. So yeah, of course it's cash secured. But anyway, so yeah, these guys are just basically double long. So anyway, but yeah, lightning spread's the wave of the future. K-Silv is so new, it isn't fair. Yeah. Well, K-Silv will get in the max factor here. It's about halfway through, but it'll, in a month and a half or something, it'll be in the max factor. We'll start comparing it. But yeah, editor's choice. Okay, I'll give the editor's choice to K-Silv tonight. It's too young to be in there, but that's going to be the best one. There's no doubt. There's no doubt. With the caveats, you really can't compare gold to silver because silver's got more upside. I would have a gold editor's choice too, and that would be iGold. iGold looks like it does a really nice job, but yeah, K-Silv is editor's choice. Yeah, SIL or SILJ for miners. Oh, that's right, SIL. Well, I kept trying SLJ because I got you. They dropped the I and put away anyway. The blocks prospectus says it sells calls. Okay, so the blocks. Well, it says everything. It says it can do anything, and they do calls on their Bitcoin. They do call spreads, but I believe it says in there they're able to do put spreads. They leave. Usually, the prospectus leaves it open for everything, but no, blocks actually In fact, they've always done put spreads since day one on the individual stocks, but they've also always done calls since day one on ETHA and one of the other ones on the actual direct access, the direct exposure. Yeah, I was just reading prospectuses today. Now, I didn't read Blox's, but that's all I do is read prospectuses. Today I'm reading Neos's. Neos is coming out with the boosted strategy. Are you guys interested in that? I know I sure am. I think that looks like a good happy medium, between some upside and some yield and stuff. Anyway, I'm making some content on it. Yeah, GDXW. That one also isn't in there, but we can give it an honorary also. It's just because it's too young. But it will be in there too soon. But yeah, we can give that one an honorary an honorary pass to be in here or whatever. Honorable mention, yeah. GDXW is good. I bet it's not beating K-Silv. I bet you it's not. I bet you it's not. But the part of the reason I'm so confident is because silver's beating gold. It could be though. But it's also a small sample size. We'll see. I don't know how far back. K-Silv. I'm sorry. Plus GDXW. Yeah, GDXW is good. I'm just joking. Yeah, it is good. Yep, it actually is beating K-Silv. Wow. Now, it's been out literally days. It came out the last day of October. I forget that every time I look it up. So K-Silv is a fair comparison to compare to. Not because of the underlines, but K-Silv came out the same day basically that Howard's other fund came out, or it came out one day before that the other one came out. K-Yield, K-Silv, K-Silv's been out before that. GDXW came out the same day or the day before K-Yield did, and ULTI from Rex. Yeah, but that's a good look. Those are both good looking there. Metals income or metals. Yeah, I just pulled up the ones I saw on the Max Factor. Is there more of them? I just put the high yield ones on there. I'm just showing what the underlines are doing because that's really all. That's like 90% of the performance. What I think December is going to be like for Bitcoin, I don't know. I really don't know anything about Bitcoin. I'll listen to you guys and what I hear on the internet more for Bitcoin. I have no idea. I'm thinking December will probably be all right for the market. I'm hopeful anyway, just because it usually is. There's all kinds of seasonal trends, but on Bitcoin, I would just be, taking a guess. I'd just be taking a guess. I'm just on a technical basis, not knowing you can, if you believe the chart tells you everything on a technical basis, I still think Bitcoin looks really poor. Just on technicals, it's being sold right now. But maybe the bottom's in, it's turned around and it'll go back up. I don't know, but just on a technical basis, especially compared to the market. That's why I kind of said also, I bet it'll be good for the market. I don't think I might just say that for Bitcoin. Plus, I don't know that much about Bitcoin. But when you're any asset that's under the 200 period moving average nothing good happens under the 200 period moving average. Sometimes the only thing good that happens if it just pops under for a little bit and pops back above. But if it pops under the 200 day and starts a trend in the opposite direction, that's no bueno. So that's I didn't want to have to sell a third of my ULTY, but when I saw this breakdown, I dumped a third of my blocks. I dumped a third of my ULTY. Because nothing good happens here. Nothing good happens under the 200 day moving average. That's my opinion anyway. Yeah, you're welcome, Greg. You're welcome. All right. So what else do you guys want to talk about? You guys watching the ball games also? Here's this prospectus I was looking at. It's boring as heck, but I was working on content right there. It was filed September 3rd, and I think they need 90 days, October, November, December. People are saying this is going to come out any day now. So I was going to, after I get out of here and after the football game's over, I'm going to produce a video on NEOS. I'm interested in that, but also I'm thinking of a video on the YieldMax Lightning Spread funds, but everyone hates YieldMax. No, it just brings out the trolls to make content about it. And so I love it. I mean, I'm all about lightning spreads, but I don't like lightning spreads enough to get a single stock lightning spread fund. If they come out with a fund of funds, if they have lightning spreads on all their single stocks and then have a fund of funds, I would be all over it. But anyway, so I just try to bring out stuff that people want to see, just for the sake of the algo. And I think more people are interested in NEOS. Like I say, everyone hates YieldMax. And, and every time I bring out a video, when they do something positive, I just get negative comments. It's, anyway, I mean, I like it, but people are short-sighted. It's a case-by-case basis. A lot of YieldMax stuff is beating any of the competition. And then a lot of the YieldMax stuff is doing poorly. So you just have to look at a case-by-case basis. Heck, Roundhill is the greatest company in the world. I love Roundhill. I have no problems with Roundhill. But I surely wouldn't buy MagY. That fund's a bust. It's a case by case. It doesn't matter that the company's good. In my opinion, it matters what the fund is, and really what that matters somewhat how it's managed. But it really matters more than anything. What's the yield, and how much does it pay? How much does it pay out? I've just learned. I'm not an expert in technical analysis, but I've been watching the market every day for years, and I guess I learned from CNBC, because the guys on CNBC will draw trend lines and they'll put up their, so I've been learning about that kind of stuff since the late 80s, because CNBC's had technical analysis on forever. So, but there's really no place to formally learn it. But in the time of the internet, there are some good sources for technical analysis. But I really don't know any of them. But yeah, I guess I watched this guy called Shadow Trader, Peter Resnicek. He's my favorite technical analysis guy. And he has a YouTube channel. It's very technical, and he's an option guy. It's not a beginner's thing, but he does a weekly video that's awesome, and he shows you everything. Then there's some guys called Trade Brigade that do a great job. They have a show on in the morning every day. And that's a very good show. And they teach. I mean, he goes slow enough that a beginner could pick up on it. Trade. And then there's a guy named, I'll just put those two up there. But then as far as market timing goes, there's a guy that's really good at that. And that is, let me get this guy up. Yeah, this guy, Shabako Capital, he has a YouTube channel. He talks technical analysis, like he'll talk, about trend lines and stuff. I mean, but he's not really teaching it or anything. But what he does a weekly show, and he'll compare everything that happened that past week. Gosh darn, I'm gonna get a copyright strike probably. Or maybe not on his thing, but anyway, but I wasn't trying to rebroadcast it. But this is incredible. He goes through and he'll tell you, more than just technical analysis. It's every kind of analysis you could want in the market. So those are my three sources. So let me put this one in the comments. I'd recommend everyone goes and watch this video. It's not really so much about technical analysis. It's about what, the market is telling us with technical analysis. So those are my three picks. Shadow Trader, CNBC's. I mean, I learned from CNBC, and I bought a lot of books. I've bought I have every option book in the world, and I've have a lot of stock market books, and there's books on technical analysis. No one reads books anymore. But yeah, Heather, no problem. No problem. Yeah, Shadow Trader and Trade Brigade is where I start out. I really start out on Trade Brigade. Those guys, and he has a morning show. If you watch him every morning, you'll understand a lot about trend lines and, support and resistance, supply and demand, and, chart patterns, all that kind of stuff. He covers it all. All right. Well, what else you guys want to talk about? Yeah, but you guys should go watch this video. Watch that video I just put there. I gave it to you guys last week also on one of the shows. I put it in there last week. He said not to worry. And because he looks back at a long-term perspective, and he shows you all different things. But the message of last week's video is not to worry. And of course, I was worried. I should have been buying Monday morning. I should have come in and bought everything I could. I mean, how did I know? I mean, it looked to me like I say, Bitcoin's under. I just don't like a lot of the stuff I like is related to Bitcoin, and Bitcoin's so far under the 200-day. I mean, I'm afraid even if it bounces back, it's going to get crushed again and make a new low. And that's why and if that happens, I'll get a chance to buy anything I'm looking to buy now at a lower price. I am looking at now. I've been thinking about it all weekend. I am going to put some money to work, and I'm looking at WPay and QLDY. I mean, if that, I think those are the two that are in the lead. I'd like to get a little pullback, and I should have bought them last week, but I think WPay and QLDY right now. Not that I don't like those other funds, but I have enough. I have a high enough percentage right now of blocks and ULTY, and because those are just highly Bitcoin related. Maybe the new ULTY isn't as much, but whatever. But whatever. They're definitely risky. The highest yields ones. Trade Brigade says it's more than likely all right. Yeah, I just have a general. That's why when I answered the question, I was trying to answer the question, but I have no idea in Bitcoin. But so I deferred because the question was, what do you think this could be like for Bitcoin? I had no idea. So I think it'll be good for the market. And I was just going with the end of the year. Yeah, I sure hope it is. Things looked really good last week, but they looked really bad the week before that. I mean, it just takes one crazy tweet and, or what about war breaking out? Isn't war breaking out? Sometimes the war is and it'll just be a little war. And sometimes war is actually good for the economy. I mean, anyway, but but it could, something could happen that could definitely knock it off its thing. Hey, Randy, how are you doing there, bud? Randy, you're from the great state of Texas also, aren't you? That's right. So we have Randy from the great state of Texas, and we have Easy Life, Mr. Chad, also from the great state of Texas. And I think there's another couple of you guys. I don't know if you guys are in here. Oh, yeah, John's a Texan, right? Or I forget if you're a Texan. Anyway, I forget if you're a Texan. Actually, the reason I think you're a Texan is because I remember your name is John, and my friend John, he's a Texan, but I forget anyway. Yeah, thanks for being here, John. Okay, yeah, DFW. Okay, awesome. I love DFW. Yeah, H-Town, and of course I'm a hippie down here in Austin. Or anymore, Austin's tech bros. It's not hippies, but I mean back in the day it was all hippies. Nowadays, every car going down the street's an Audi. There's a ton of tech bros in Dallas, Fort Worth also. I mean, North Dallas is full of them. All right. Well, I'm going to get out here and watch the rest of this game. It's 17-6. It just started. Plus, I need to go make some dinner. All right, guys. Well, I thought it was a good show tonight. I hope you guys enjoyed it. I hope I answered all your questions. Lived in Austin 2018 through where you going to school. I mean, a lot of people have been through Austin when they're in school, or maybe they had a job here after school or something. But anyway, what's I going to say? Yeah, everything you hear here is not financial advice, for fun and entertainment only. Consult a licensed planner. And also, if you'd like to donate to the station, you can at paypal.me/maxconvexity. Also, don't forget to hit like and subscribe. You were working at a bank. Okay. Heck yeah. All right, Heather, you enjoy your evening too. I'm starving. I'm going to go make some. I'm going to make turkey sandwiches. I love turkey sandwiches. I've been looking forward to it all day. All right, guys, have a great day, and I will talk to you later.